Seth Holm joins us with some financial news. UBS downgraded freight. Seth, what exactly does that mean?
That's right, Emily. Yesterday, UBS out with a big report. They downgraded the trucking and intermodal stocks. Why did they do that? So the main reason is they took a look at the Cass Freight Index for shipments in the U.S. This index has been down 5 straight months since December 2018 over here. And so that indicates a downturn to them. There's been 3 of those since 2000. One right here in 2016, one that pretty much lasted all 3 years from 2007 to 2009 here, and then one from 2001 to 2002. Now, on average, when they took a look at history, these last anywhere from 12 to 19 months. And so right now we're only 5 months into it, which suggests to them that this downturn might last all the way through mid-2020.
Yeah, interesting news here nationally, but internationally, you were talking about some news too.
That's right. So what I have here is a chart of the S&P 500. And the S&P 500 right now is within 1% of an all-time high up here at 2917. Now that's a little unusual because if I told you right now U.S. 10-year bonds are yielding 2.05%. We've got an inverted yield curve again. European bonds, many of them are negative yielding and getting worse. And then European, U.S., and Chinese economic data has been horrendous. And so typically you wouldn't look at this chart and think, well, the stock market's going to be an all-time high, but we've got some things going on, mainly 3 things. So today the Federal Reserve in the U.S. meets, and we're going to have this thing called minutes, where basically what we're going to try to see is whether or not the Fed's going to cut rates in July. That's been supporting the market. Then yesterday, the head of the EU Central Bank, Mario Draghi, came out. He front-ran the Fed. He said, we're going to cut rates in July, and that angered President Trump. And then thirdly, we've got the G20 meeting next week in Osaka, Japan. We've got Trump and Xi Jinping meeting, and so people have gotten optimistic that we may get a trade deal or a thaw in the Chinese-U.S. relations.
Yeah.
But if we don't get all those 3 things, if the Fed doesn't cut in July, if we don't get a trade deal, this is a very dangerous setup, right? Because we've got the $300 billion in extra Chinese tariffs that are on the horizon here, and we actually just did a paper. Our research team here at FreightWaves just did a paper on everything U.S.-China trade war that's on Sonar now, and you should check it out.